This is the briefing for Friday, November 21st. Well, I jokingly have friends and clients who say that there is a Joe indicator. And that Joe indicator basically says that if Joe, meaning me, is out of the office, there's going to be a big move in the market. Yesterday, I was out of the office. And of course, there was at least in the Dow, 1,000-point move. It was up 300 points at one point in time and then down 700 points. So it was a pretty big move in yesterday's trading. I'm not so sure that being out of the office really had anything to do with that. But anyway, it's kind of fun to talk about. These are 60-minute charts of the spiders, the Qs, and the IWM. Now, this was yesterday's move. You can see the gap up, and then the news came out about the potential for no interest rate reduction in December, and potentially other news and earnings news that came out that drove price higher. And then all of a sudden, we got this sell-off that occurred for the rest of the day. Now, going into today, you can see that we opened up a little bit lighter. Now, this was a pretty good indication that we were going to see some type of rotation back to the upside. When I sat down and looking at the pre-market and looking at what was happening after the open today, it was pretty clear that we were going to see some type of rotation to the upside, and it was not going to be a continuation of the selling that occurred yesterday. And you can see this right through here. This is basically the low of today, and you can see where breadth was. This is S&P breadth, so it was about 300, almost 400 shares positive in the S&P 500. That's a pretty strong reading. The same thing with the NASDAQ. You can see the NASDAQ was right around, let's call it about 1,690 shares, and the same thing happened with the Russell. It was fairly strong. So the market internals were fairly strong. You can see this is net volume, which is up volume minus down volume. So you can see that was even moving differently. Same thing in the NASDAQ, and the same thing in the Russell. So from an internal perspective, you can see that while we had this low and it appeared we were going to see follow through from yesterday, and I came into the day thinking we'll probably have follow through, but when I saw what happened with the internals at the open, I stepped back from this and just wanted to see how it developed. Now, the real crux of the issue here is the market is in search of value. It is uncertain as to whether value is higher or value is lower. And that's why we get this rotation and we get these wide swings, is because some news will hit the market and it'll be interpreted as bullish, and we have this huge up day. Then all of a sudden something else will come out and you get a bearish interpretation, and you get a complete collapse of price from where it was previously. So it's in search of value. So this is a difficult market to trade because it is in search of value. So we're liable to see in a continuation of these wild swings back and forth. Now, one thing we have to keep in mind is this is a downtrend on a 60-minute basis. So when we look at the daily charts, we can see that we're really at some very important key reference areas. Now, I've marked some shorter term key reference areas here. This 665 area in the spiders. If we take that out, then we're going to go back up. We're going to test 675, which was the high from yesterday, and where this slide started. The same thing is basically true in the NASDAQ or the Qs. You can see the Qs right at the 597 area. If we take that out, we're going to potentially test this high, and that would open up testing the next level around the 617 area. Same thing with the IWM. If we take out the 239 area, we're headed up to about the 242 area. Let me see if I can get this centered a little bit better. There we go. And then of course, looking to the downside, we're looking at about 230 in the IWM. We're looking at the 581 area in the Qs and the 651 area in the spiders. So from a short-term perspective, a break of either one of these is going to give us a pretty good indication of the next greater degree move. Now, I will say that if we break the downside short-term, that's going to be a break, an extension of a longer term key reference area, longer term support, and that would be a significant event. Breaking to the upper extreme here would just suggest testing these other extremes here, and then potentially even this high back through here. Now, I want to talk about this move that we saw in today's trading. The concern I have here is that this has some of the characteristics of a counter trend rotation. So either counter trend to this move here or counter trend to this move here. I think this might be an aberration, but this looks like a three-step counter trend rotation. Now, on a shorter chart, it's pretty clear that shorter term chart, I should say, it's pretty clear that there's not equality between legs 1 and 3, but it's pretty close, and there doesn't always have to be equality between legs 1 and 3. That gives the opportunity that if this is a three-step counter trend rotation, then the higher probability is we're going to test these lower extremes. The key to this is going to be about the end of leg 2, which comes in around 657 in the spiders. It looks like it's going to come in right around the 587 area in the Qs, and it's a little bit different in the IWM. You can see we've got this not so much of a three-step counter trend rotation, but if we were trade through about 233, this convictive buying that came in, this convictive long candle, that's going to suggest potentially that this is going to get tested, and then we're going to see this this move to the downside once again. I'm going to need to move this key reference area, but this trend line area. So the other thing is you can see what happened with volume. Volume fell off pretty dramatically. Volume falling off pretty dramatically on this rotation up. Same thing with the IWM or the Russell. But breadth stayed strong. So that's a kind of a fly in the ointment, but we have to keep in mind that what we want to see in Monday's trading is if we start to break these leg 2 areas that I just pointed out, then that's going to open up a test of today's low. If we hold above that area and we break 665, that means that this is complete or not complete as a counter trend rotation, but is the beginning of another rotation back to the upside, and we're likely going to test these upper extremes in the short term. Now, looking at where we are in terms of the longer term, you can see this area of rotation that we've been in the spiders. So basically what we're looking at here is this rotation here. Now that's why yesterday and today's low is just very, very important, because breaking out of this lower extreme right through here is going to suggest it's a greater degree time and price breakout, which is going to suggest that the potential for a potential move down to test the next level of longer term support around the 630 area. So you're looking at a fairly decent move from here to here. The other situation here, and I'll point this out on the spiders, and you'll see it in the other indices as well, is that a trend is a series of higher highs and higher lows. In this case, it's a higher highs and higher lows. So you can see this is a run and a run, pause, higher high, higher low, higher high, higher low, higher high, higher low. This is the last higher low. So if that is broken, you can see it was tested yesterday and tested once again today. If that's broken, that puts us into a weekly, not a daily, but the potential for a weekly counter trend rotation, which is much greater in degree of time and price. Also, please note, this trend here on a daily basis is being supported by volume. It's supported 52-week highs minus 52-week lows, still negative. Breadth expanded today, but that could be an aberration, and it is not uncommon to have a downtrend in breadth, as you can see right through there, and then have a spike up in one day that disappears in the next day. This is the Qs, basically the same thing that's going on. You can see the rotational pattern a little bit different. We had this false breakout here, but right at this lower extreme, right through here, going back all the way back to this point here. So looking at about the 584, 585 area as being very important, which basically is today's low. Volume increasing on this move to the downside, breadth expanding, but once again, you can see the trend in breadth was down except for today's trading. and that what happened today was likely to work off a extreme oversold condition. IWM, basically the same thing. Now it has broken out. It's broken below that last higher low, but it's just really struggling right in here, rotating right around this 235 area. Volume increasing on the move to the downside, breadth expanding in today's trading as in the others. And then in terms of overbought and oversold, we did reach a point we were approaching oversold yesterday. We were oversold in the NASDAQ. This is the NYSE. Now we're overbought in the NYSE and overbought in the NASDAQ. So that could give us a pretty good indication that we might anticipate some lower prices in Monday's trading. Looking at total volume increasing in today's trading. This is net volume today. You can see how it expanded nicely. This is total volume in the NASDAQ. This is just really very, very concerning. And this is even more concerning to see this trend in net volume, even though we got a spike in today's trading. So it's going to be very, very important and very interesting to see what happens Monday. Now, in terms of Monday's trading, Monday is the beginning of a holiday. Actually, it's a holiday week. So volume will typically be maybe normal on Monday, but as we approach Thursday, markets will be closed on Thursday. They'll be open on Friday, but nobody will be working. Typically, it's just a very, very low volume day with not much movement unless there's some major news event. So what happens on Monday is going to be the important day. And then from there on, Tuesday and Wednesday, we'll see volume begin to fall off pretty dramatically. I'll pick this back up on Monday and then see what we're going to do for the rest of the week, because it may not even be worth doing a briefing with the low volume days that I've experienced, at least in past Thanksgiving holiday weeks. Have a great night, have a great weekend, and I'll pick this back up on Monday.